This morning we are initiating coverage of Superior Group of Companies. The stock symbol is SGC. We're initiating with an outperform rating and a $16 price target. Superior Group of Companies operates in three different segments. They have healthcare apparel, branded products, and contact centers. And what we like about this company is that each one of those sectors as an industry is growing in about the mid-single-digit rate. And interestingly, we believe that the company, given their positioning in those industries, that we think that there is above average growth potential for each one of those segments. Notably, each of those company segments are profitable and they are growing. We anticipate that right now, because of tariffs, the economy, and things like that, it is a consumer company, so it is affected by some of those things, and that's the reason why, in the course of the last couple of quarters, that the revenues have been somewhat lackluster. Now, the company believes that there will be an improvement from the Q2 from Q1, so we'll see some sequential revenue improvement, but as they kind of cycle through some of the trade policy issues, we do anticipate that revenues in the back half of the year, as well as some of the margins, are probably going to be affected. Now, the company is going through mitigation efforts, and they're relocating some of their sourcing and so forth, and that we think is going to be largely resolved this year, so that we're kind of setting ourselves up for a pretty nice 2026, assuming that economic prospects improve. So we do think that the company is going to swing towards positive revenue growth as we go into 2026, which is only a few quarters away. And so the interesting thing about consumer cyclicals is that they do trade based on revenue growth. If you look at the stock, it's down 39% from from earlier in the year. And our viewpoint here is that we should see a turn and an improving trend for the stock price as we start to cycle towards revenue growth. The company has a very solid and flexible balance sheet. As of March 31st, it has $19.8 million in cash. Total debt is only $95 million, which is a net leverage of about 2.8 times, which is very conservative, if you ask me. And so the other aspect of the company that we'd like to highlight is that they are very favorable to shareholders. They have been returning capital to shareholders in the form of dividends, stock repurchases, and in fact, they've had an uninterrupted dividend since 1977. And when we look at the shares in terms of the valuation, the SGC shares are trading at 5.9 times enterprise value to our 2026 adjusted EBITDA estimate, and that's below the peer group weighted average of 7.9 times. So combined with the pretty attractive annualized dividend yield of about 5.8%, and the fact that the stock is trading below its weighted average peer group, we think that there's significant upside to our $16 price target. It is one of my favorites in the industry, looking at the valuation, compelling dividend yield, and total return potential.